All right. While everybody gets in, I like to have a little fun and play a game of where in the world is Rob Chrisman today? Rob, your background looks a little different. Where are you, my friend?
I'm back in Marin County in San Rafael, just north of San Francisco.
Okay.
Um, nothing too exciting. It's a little bit of a gray, dreary day. It's cold for California, for Northern California, so I opted to just stay in the house,
Okay.
stay
And
in the home dining room.
and Andy, it's cold where you're at too, right? You're in Columbus?
Yeah, Columbus is wet and cold today, but that's not unusual for January.
It's not snowing though, right? Is
Not
it?
this week.
Okay. All right. Well, that's a win. It's dreary in Austin, Texas too. So I feel like we have covered like almost an exorbitant amount of the country, all being dreary and cloudy today. All right. Well, let's go ahead and get things kicked off. Excited to have everybody join us. Patrick in the chat just said Boise is not rainy or cloudy today. So Patrick, we're all a little jealous, my friend. But we'll go ahead and get things kicked off. I'm Melissa Langdale. I'm the president and COO of the Mortgage Collaborative, as joined as always by Rob Chrisman, and today our very special guest Andy Hellard with Matic Insurance Services. Is going to talk about some really fun insurance topics that we have lined up. But before we get started, everybody, as you guys know, we put this on YouTube. We also post this on our TMC Connect podcast channel. So make sure you subscribe there in case you miss a week with us. You can catch up on all things rundown. All right, so let's go ahead and get started. Andy, not everybody here might know about Matic Insurance Services. Will you give us kind of a brief overview of who you guys are?
Sure, happy to. So if you think of Matic as being a combination of a tech company and a digital insurance agency, you have a pretty good handle on what we do. And so the core of our business is that we will partner with banks and mortgage companies. And what we then do is we integrate the home insurance buying process into the process of getting a loan, generally a mortgage. And that's done a couple of really interesting things over the course of the last few years. It's given us a front seat view of all of the changes in the mortgage industry that everyone on this call know about, as well as a lot of changes that have happened inside the insurance industry that have really complicated a lot of and exacerbated a lot of the problems in the mortgage industry over the last few years. And so really what we do is offer insurance as a service to those partners. And you plug us into your process and we do everything downstream from there.
So your insights are going to be really fun today. I can't tell you how many lenders I talk to
Mhm.
that say on a regular basis that they're frustrated with the
Mhm.
rising cost of insurance, and you have been such a good sport and agreed to talk about that with
Mhm.
us today. Would love to hear your thoughts around what in the world is driving homeowners insurance rates up, and then maybe we can dive into why in the world are there's certain areas of the country that
Mhm.
are, having really significant challenges with
I
getting.
think uh, I think we can probably pin the blame of higher homeowners insurance directly onto Andy's
Mhm.
shoulders.
Clearly my fault,
Indians.
personally. That's certainly what my team feels like sometimes. The
So Andy, to follow up with Melissa's question though, real quickly, is your client, because it's nice to have a client, is your client the lender, the insurance company, or the consumer?
Mhm. Well, the customer is the person that gives you money. And so the end of that is our customer is the person that will choose where to place their insurance. So Matic partners with about 40 different insurance companies across the country. And in a minute, I'll talk about why that's so important. And so when we get a lead in and we work with one of those customers, what we'll do is find who is the best insurance company for that particular customer. So our customer is our customer. However, the mortgage company is a key partner here. And the service that we provide to them is to make sure that their customers have the right coverage and that they can close their loan correctly. So it's a pretty complicated ecosystem where we have a partner with the mortgage company, we have a customer who is choosing where to place their insurance, and then we have a carrier who's actually writing that policy. Did I answer your question?
Yeah. Well, what's the difference between you and an insurance broker?
We are fundamentally a broker. What
Okay.
makes us or differentiates us from other brokers or agencies is our technology, our deep knowledge and integration into the mortgage industry and the technology there, and then the sheer breadth of our carrier panel on the back end, which, as I mentioned, we've got about 40 different carriers, which is a very large number that you're not going to get with a lot of loan offers have a guy. I got my guy down the street I talked to. He's got what, two, three carriers? Where when you're dealing with a company like Matic, where we've got this sort of relationship, we've got the breadth of carrier coverage to place almost any business.
All right. And so when does the borrower become aware of you?
Mhm. Generally, the borrower becomes aware of us. So what we'll do, let me give you a generic example. So let's say we're integrated with a large mortgage originator. And then what we will have done is basically tied our technology into their internal loan origination system. And a common thing is when a loan hits intent to proceed, that's when we know they're serious about getting a loan, and we know that they will need to get homeowners insurance. So at that point, generally speaking, two things happen. We will get that lead shot over to us through the tech, and then we will reach out in a co-branded way at that point. And so at that point, we'll introduce ourselves and say, hey, we're Matic. We work with your loan originator. They asked us to help you shop for home insurance. You don't have to work with us. You can go find your own. But if you'd like to, you can engage with us now. And we generally will do that with a digital reach out, phone call reach out. And a lot of times the loan officer will actually introduce us as well.
So the so many questions, so little time. One of the I'll show my age here a little bit, but I've heard rumors, for example, that there was an insurance company, maybe it was Lloyd's of London, who would insure things like Marilyn Monroe's legs
Mhm.
or somebody's singing voice. So I guess for enough money, you can find a company who will insure something at some price.
Mhm.
But do you see that in your line of work where in terms of mortgages and borrowers, do you have specific companies that will insure tiny homes or
Mhm.
insure houseboats
Mhm.
or
It-
yurts in Wyoming?
There are So there's two parts to your question. So to the second part, which is the unusual dwellings, yeah, there are insurance companies that specialize in that sort of thing. American Modern's one, Foremost is one. We have relationships there. Now, to answer the first part of your question is, can you place any business? Well, a year ago, the answer was 100% yes. The answer now is it depends. And I think I saw a question in the chat about California. That is a particularly difficult area. Homeowners is a very standardized product. The coverage is pretty much the same between your different carriers. But what we've really found over the course of the last few years is that carriers have let themselves get overexposed in certain areas. And in some of the areas that they've gotten overexposed in, those have also been areas where it's been very difficult for them to raise prices. So I'll take California as an example. So traditionally, the California DOI has made it difficult for a carrier to raise prices there. Okay, that wasn't such a big problem until a few things happened. Well, the first thing that happened was the inflation over the course of the post COVID era ran much, much hotter than anybody planned for. And if you priced your policies expecting a 2% inflation rate and you got a 9% inflation rate, and then suddenly you discover that you're an insurance company that's in the business of repairing homes, your costs have gotten entirely out of where they were expecting to be on the pricing side. Then the second thing that has happened is several years in a row with unexpectedly high catastrophe claims. that is wildfires, that is hurricanes, that is tornadoes. And this has been a huge problem along the Gulf Coast. And so if you're an insurance company and you priced with one set of expectations, and then you got hit with inflation, you got hit with high catastrophe charges, and in some regions you have DOIs that won't let you raise prices. It's really that perfect storm that has resulted in the lack of product availability in areas that a few years ago we never saw a lack of product availability.
Hmm.
So are the folks in Missouri and Ohio and Illinois or wherever saying, what the heck? Why do we have to pay for California or Louisiana or the Carolinas or Florida?
Absolutely. So I live in the exact center of Ohio, and you may have noticed we don't have a lot of wildfires or hurricanes or floods, and we're seeing 15 to 20% increases here. And so we've started to hear a lot of noise in areas in the Midwest where traditionally you've seen very low increases. And so what we've basically seen is a giant increase in interest in people shopping because their current carrier has raised their prices so much. Now, here in the middle of the country, we've got plenty of options for you. We love Indiana leads because we've got lots of product available for you. You get down into the South, you get down into the Gulf Coast, you get into areas of the West with the wildfire. That's where our agents have to work a lot harder to start to place some of this business. And it's an interesting point that you made there, Rob, about how you're seeing big increases in areas where you wouldn't expect to. Well, earlier I mentioned how the departments of insurance, and each state has a department of insurance. There is not one insurance market in the United States. There is 52 if you count Puerto Rico and American Samoa. And each of those DOIs has a different set of rules about how you can increase prices. So if you are a national insurance company, you write in, let's say, the lower 48, you may not be able to increase the may not be able to increase the prices as much as you want to in certain states, but you might be able to squeak that in as some of these other areas where you can get a few extra points in some of these areas with a friendlier DOI.
Interesting.
Well,
So,
that wraps up the show.
well,
No.
no, I want to talk about solutions. I mean, frankly, these areas like Florida, Louisiana, California, I mean, you hear about it all the time. Carolinas, even you mentioned with their hurricanes, it can be challenging not just for the rising costs, but also just finding a carrier that's willing, to be in that space. How are you suggesting that lenders, number one, talk about insurance with their homeowners up front? And then how are you helping them to navigate that?
Yeah, the first thing you have to
It's like
take into account
it's
is
like it's
that
like and I think what Melissa said, it's like talking about sex with your kids. It's like, how do you bring the subject up? How do you navigate that? How, look, anyway. Cool.
You're way off rails.
it is not a bad analogy. It's an
Story of
awkward
my
one, but
life.
it's not a bad analogy. And so what we've really done is a ton of loan officer education as we have integrated into these large lenders. Our customer success team has spent a lot of time educating loan officers on a subject that previously they've never had to think about. You just reached out, insurance was there. So now what your loan officer has to do is they have to build extra time into the process to make sure that they can find insurance so you don't delay the closing. So you basically have to build a little bit of extra time in there. The next thing you have to do is the loan officer has to educate the borrower about how to go about doing this. So a lot of borrowers will want to go off and do this themselves, and that's possible, and it happens all the time, but it's going to take longer. And so if you work with a company like Matic that has able to bring a big carrier panel along with them, that really increases the chances that they're going to find a product. And truthfully, in a lot of parts of the country, it's turned into any product. There are parts of California, there are parts of Colorado right now and Utah that are wildfire exposed that are a big problem. There are parts of the Gulf Coast, especially Louisiana, where it's almost like bring me anything so that I can get this thing closed. And it's really been an interesting state by state dynamic. So if you had talked to me 18 months ago, I would have told you that Florida was by far the biggest problem. Florida is a huge problem. But they've actually taken some steps, the state has some legislative steps to really open that market up a little bit. And coverage is available. It's expensive, but it's available. And we're starting to slowly see that same dynamic in California a little bit. Now, they're probably 18 months to 2 years behind everybody else, but they've started to loosen some things up there as well. And I'm a little optimistic that we'll start to see some action there. Now, Texas is an interesting case because Texas is like 4 states in one. And what you have down along the Gulf Coast looks nothing like what you have in El Paso, which looks nothing like you have up in, Odessa.
Yep.
And so state is actually too big a unit to look at. So if I'm I'm an originator, I'm starting to think about this, and I'm going to start to identify a loan where I might have a problem. And that's really what you want to think about is you're going to have to get a little more granular than state level. As you're looking at one of these opportunities, if I am in the Midwest, I'm probably okay. If I'm in Florida, I got a question mark. If I'm along the Gulf Coast anywhere, I've got a question mark. If I'm in the Mountain West, I got to think about wildfire zones. And so there, it's really about planning ahead. Am I going to have a problem here? And if you are going to have a problem here, that's when you want to start the insurance process a lot earlier. And that's where the education really starts to come in.
Yeah.
So Andy, is it going back to who's the client, who's the customer, the one that pays you the money? Can you work with individual loan officers or brokers, or is it an enterprise-wise solution?
At the moment, we are primarily an enterprise solution. That being said, we do have solutions for individual loan officers. And there's actually, if you go to matic.com, there's a place where you can get a quote. And what we've done in the past, if there's a loan officer that has interest in this, we can actually create a co-branded version of that tool that's right off of the website for a loan officer that would let them redirect business to it. So we're happy to work with individual loan officers. But at the enterprise level, that's where we have the much more integrated technology into their process.
It seems like if I was, back in the day, basically 2 years ago, when loan officers were doing 5, 10, 20 loans a month. Now they're doing 1, 2, 3 loans a month. It would seem like, is it worth their time and effort to explore that? If I'm a loan officer doing, let's say $2 million a month, let's say, 5 decent sized loans.
Mm-hmm.
So I can go to matic.com and try to figure something out.
Mm-hmm. If for somebody doing that volume of business, we're actually able to set up and configure something fairly quickly. It's a lightweight co-branded solution, basically a link that you just share with your borrower that lets them fill it out and shop. So I would say for somebody at that volume, it's worth exploring. Yeah, and Matic's not the only solution out there. There are many. But if I look at the insurance market as a whole, we're going to continue having problems throughout 2024 with capacity. I watched the carriers' their financial results, and all the big carriers are releasing their Q4 results from 2023. And really what I've seen time and again is they're like, we're making a bunch of money, except we're losing a bunch of money in homeowners insurance. And what that tells me is that they will continue to be really tight on product availability throughout at least 2024. So it's not too late now to start exploring some of these broader solutions to try and get access to a platform of some kind that can get you into the broader carrier market. Because once again, if you're dealing with a guy down the street and he can offer you just State Farm or he can offer you just Progressive, there's no way that one company is going to be willing to take all of your loans. You're really going to have to explore some more options.
You know, we've
Yeah,
had
I remember, I remember, so there's an old joke about you have a line of army recruits. They're all there in a line, and the drill sergeant asks for a volunteer, and everybody, volunteer step forward, and everybody steps back except, Andy,
Mhm,
and you're the one who has to dig the pit for the latrine.
mhm.
The same thing was happening a couple of years ago when volume was through the roof, and companies were backing margin off, and it was almost as if they couldn't increase their margins fast enough because others were increasing it more.
Mhm.
And so they still stood out as aggressively priced and still had too much business coming in. Does the same thing happen with insurance companies? Like you don't want to be the insurance company that doesn't change their guidelines and everybody else did.
Yeah, very much so. You do not want to be the last person to turn business off in a certain area. And that is really the dynamic that played out all the way through 2023. So in shockingly, insurance companies are run by risk averse people, which is, kind of the point. You don't want, some kind of crazy pirate running your insurance company. And what that meant is that they were very slow to turn off business that was unprofitable. They didn't want to make the DOIs mad. They didn't want to make the customers mad. But as the 2022 results came out in the first part of 2023, those same risk averse people turned the dial the other way. So they pulled it probably back too far. And they all did it at once. There's very much a herd mentality. And we saw this in California as I think Allstate was the first one that announced they were going to pull out. And as soon as they did it, there were all these other people that wanted to do it. They just wanted somebody else to take the hit in the media first. So as soon as Allstate pulled out, then you saw Farmers pulling out, then you saw Progressive shutting things down. And that is a tendency that you've seen in a couple of places. Now, it has good and bad things. So it's bad because once one big person moved in a particular direction, everybody moved that way. But it'll happen the same way as well. Once one brave company starts opening up again in certain markets and starts making some money, all of these other companies will want some of that money as well. So they'll come fairly quickly. The question is really who's going to come back into these markets first. And that's a question that our agency leadership asks me on a weekly basis. So
we've
There
also
is there is yeah, there is a conspiracy theory, or there is a theory out there that talks about the direction finding ways, on your phone, ways you can use ways. And if there's, three different ways to get from point A to point B, and Waze is telling everybody on the road to use the first way to get there, that it'll clog that up, and you're better off using, route number 2 or route number 3, because all the smartphones are telling people to go down route number 1. With insurance companies, does Matic vet those insurance companies that you might offer up as a solution to insuring that tiny home or that houseboat in Sausalito, California?
yeah, it's an interesting challenge, and it kind of goes back to what I was talking before about the ecosystem that Matic operates in. And so, if you look at the originators we partner with, the key promise we make to them is that we're going to take care of your people. We're going to place them in the right place. And it's also critical that whatever we write there meets Fannie and Freddie insurance requirements so they can resell that loan. And so we've got commitments, contractual commitments of the quality of the insurance companies that we're willing to write with. And we could sell a lot more business in the Gulf Coast in Florida if we were willing to dial that financial requirements back a little bit, but it'd be bad business. It wouldn't stay, it would get canceled, it would cause problems for our partners. So we've chosen not to do that. So we will only work with a set of insurance companies that meet our financial requirements.
Okay.
All right, we've got a question in the chat, which I think would be fun to answer. So Michael Simons actually says, with Maddox focus on technology, you'd seem to be primed to aggregate the new wave of solutions, like companies that have algorithms that can evaluate every property in California, for example, parametric insurer for states like Florida. Is that part of the playbook going forward for Maddox?
We've partnered with insurance companies of all size. We've partnered with the biggest and the oldest companies in the United States, and we've partnered with a lot of insurtechs and been very successful. The fundamental challenge with the new insurtechs is not pricing, it's not technology, it's capital. And this is what we've seen time and again is in insurance. I'm going to get a little too technical here, but basically for every policy that I write, I am statutorily required to hold back a certain amount of that premium to cover eventual claims. Makes sense, right? Well, but think what's happening if I am an insurance company that wants to grow. I don't have that base of reserves to back up the growth that I want to get into. And so as we've looked at a lot of these new solutions and these new, at the parametric and some of these other things, the problem is not the technology. There are lots of, any of these big companies could do this if they really wanted to. The challenge that we've run into time and again is the regulations that have prevented it from doing it, and then the capital to back up the companies that want to do that. Because as I mentioned before, we've got commitments that we're only going to write with the highest quality companies. So we are regularly vetting this. And actually, we work with some really exciting companies that there's one that will give you a bindable quote on nothing but an address, which is pretty amazing. Behind the scenes, they will go out, they will quote, they will pull in data using all the third-party solutions. And with that single address, they will come back and say, this is the price that I'm going to write this property at. But the problem is they're not big enough that they can't cover the whole country. Like they just don't have the capital reserves. So that works great in a couple of small places. But if you're a company like Maddox and we've got to operate in all 50 states, we've got to work with companies of ultimately all size.
Are you suggesting that loan officers and companies, particularly in those areas like California, Florida, the Gulf Coast, Louisiana, are looking at insurance before they even put in offers?
It's not a bad idea. Especially the closer you get to the water, that is really where it becomes a realistic possibility that nobody will want the business.
Yeah.
And this was just not something that happened 2 years ago, but it is something that happens now, and it is something that could continue to happen going through 2024. Now, there is a small, I'll call it a light here. And the light is the growth of alternative insurance products. They're often called excess and surplus lines. Sometimes you'll hear them called owner-occupied DP3. You don't need to remember that. But all you need to remember is that they are not your standard insurance product. And those things are regulated differently than the standard products. And they're the ones that'll take coastal houses on piers. They're the ones that'll take stuff that is right next to a national forest that always catches on fire. However, you have to work with a broker that knows these products exist, and you have to work with a broker that knows the regulatory requirements for getting them written. And so if you are specialized in those hard to write properties, the yurts that Rob was mentioning earlier, it will really benefit you to find a company that understands these complexities and can help you work through them.
Andy, would you ever start an insurance company?
Ooh. The challenge that you've got with starting an insurance company is that the insurance companies that exist now are really good at being insurance companies. And that's really what the startups have found. The margins are thin, the capital requirements are high, but the market is enormous. So if one were to start an insurance company, really the key thing you would have to do is identify a corner of the market that is not very well served right now. And right now there are some of those. I mentioned that excess and surplus lines. I mentioned, the coastal properties. But of course, the problem is focusing on those areas, there's a reason the big guys haven't done it, because generally it's a very hard thing to do. There is a lot of opportunity here, and a lot of our insurtech partners did very well in the run up to 2023. And I will say those of them that survive 2023 are going to come out the other side as a very, very effective and very, very efficient company.
Yeah, you wouldn't want to be the only insurance carrier to insure 1950s concrete, steel rebar condominiums in Miami Beach.
No, no.
No, not a recipe for long-term success there, probably.
We have one more. Well, we have time for one more question. We are right up at this, but this is such an interesting comment in the chat that I thought it'd be fun to kind of pull on it a little bit. Force placed insurance. Are you guys doing anything with force place? And you know, that's such a complicated process for both lenders and customers to walk through. Would love just your thoughts around it.
Yeah, the short answer is the right way to handle it is to keep them off of force placed in the first place.
100%.
And we've actually built a couple of really successful force placed campaigns with mortgage servicers. And so what we will do is as soon as it looks like somebody is going to get into force placed, we will reach out and explain to them what's about to happen and why it's a bad thing. Because once you get onto force placed, it's very difficult to get off, because the carriers look at you ending up at force placed as a negative in their underwriting. And so once you're on there, there's really not much we can do, but we can do a pretty good job with the people that are willing to work with us of keeping you from getting on there in the first place. And that's really where we focus most of our efforts.
I love it. Well, Andy, this was fantastic content. I learned so much today, and really appreciative of you spending your time with us. And Rob, as always, thanks for joining, asking the hard questions that I don't want to ask. And thanks everybody for joining us online. And we will see you next week. Hope everybody has a fantastic weekend. Bye,
Great,
everybody.
thank you.
Thank you, Andy. Thank you, Melissa.